saying of the tax dollars that the IRS collected, 1% of people are paying almost half of it. 60% of people paying only 5% of the slice, 1% of people paying 40% of the slice. This number of people pay this amount of the income tax collected by the IRS. This number of people pay this much. So these together are going to pay almost all of the income tax. And this group here, more than half, is going to pay this little bit. Basically half, half of the population doesn't actually pay income tax. Hey, what's up everybody? Let me go ahead and disappoint a few of you. I'm not going to get political in this video. I'm going to try to avoid that. I'm a tax guy, I'm a numbers guy. I'm going to present you with data, a couple of examples, and then data from the IRS so that you can be informed to make your own decision on what is fair share of paying income taxes. This question comes up every single time there's an election. It comes up in between elections. It comes up all the time. Who is paying their fair share of taxes? And from what I have seen and what I know and am confident in the tax code and who is paying taxes and what rate they're paying taxes at, I think that there is spin in this conversation from everybody. I don't care if you're Democrat, Republican, Independent. I don't care if you're CNN, Fox News, the local news station. Everybody is taking a particular story or a particular number and they're spinning it to make their point. Classic example of this is, Warren Buffett's secretary pays more as a percentage of her income in income tax than Warren Buffett does. Okay, let's delve a little bit into that. Let's assume that she's single. I didn't look, I read a bunch of articles, but I didn't look to see if she was married or had dependents or kids or anything. But, it'll be more conservative to assume she's single because single people will pay more taxes. So she would actually make more than what I'm going to suggest if she were married or if she had kids or if she itemized her deductions. And so we'll go conservative, assume she's single, paying a higher percentage than any of those other examples. Warren Buffett has said that he pays roughly 17% of his total income in income taxes. So in order for his secretary to pay more than 17% when you divide her income tax responsibility divided by her gross income, she would have to make $100,000 or more in order to pay more than 17%. So the purpose of this story is to basically draw up your emotions and say, wow, I'm a secretary, or I know a secretary, my sister's a secretary, and she's paying more as a percentage of her income than Warren Buffett, who makes billions of dollars. Well, the secretaries you're thinking about when you hear this story probably aren't making $100,000. Now again, completely up to you whether you think that someone making $100,000 should pay more as a percentage, not as whole dollars, of course, but as a percentage of their income than someone making $1 billion. So that's completely fair. The only thing I want to say is don't think that she's making $20,000, $30,000, $40,000 as a secretary and paying more as a percentage of her income than Warren Buffett is. It's just not the case, and we'll actually see that in some of these examples. So let's jump into some of these examples and see who's paying their fair share. Again, I'll present you with data. You make your call on who's paying their fair share. We're going to start with single individuals. So we're assuming that they're single with no kids and they're taking the standard deduction. So a single individual making $40,000 from their job of gross income, this is your salary from your job, will take the standard deduction. The standard deduction basically for a single individual is $12,200. And all that means is you get to subtract $12,200 from the $40,000 and you don't pay any income tax on that. So it's basically a built-in way to shield some of your income from income taxes. It's given to everyone. And so, the tax they'll pay is $3,000 roughly, and you take the $3,000 divided by their gross income, they'll pay 8% of their income in taxes. So jump down to the single individual making $100,000, taking the same standard deduction of $12,200, they'll end up paying $15,000 in income taxes, which is 15% of their income. So that's a lot. I mean, this person is closing in on the 17% that we said that Warren Buffett said he's paying. So, billionaire paying 17%, person making $100,000 paying 15%. Is that fair? Well, I mean, as a whole dollar amount, Warren Buffett's paying a lot more than $15,000. He's paying millions and millions of dollars in income taxes. So, it's up to you whether you want to look at the whole dollar amount and say, well, who's paying their fair share? If you want to simply look at percentages, and sometimes percentages can mislead, but still, a fair point, and I'll leave that up to you. Now, a single individual making $250,000 a year, they're doing all right. I mean, they're doing just fine. Taking the standard deduction, paying $58,000 in income taxes, which is 23% of their gross. So you can see, single individuals, the more you make, the more you pay in taxes, as a percentage and as a whole dollar amount. Now, the green numbers, what are the green numbers? The green numbers are the percentage of people who filed tax returns that fall into this category. So 152 million people roughly filed a tax return. I'm looking at 2017 data because it's the most recently available that the IRS has put out. And so 152 million people filed tax returns in 2017. There's people, of course, who didn't need to file tax returns. So this isn't of the total population. This is of the people who file tax returns. So of those who file tax returns, 33% of people who file tax returns fall into the single making $40,000 or less. And so that's a high number of people paying 8% or less of their income in income taxes. 12% fell into this category of single, making between 40 and 100,000, and 2% fell into this category of making between 100,000 and $250,000. We'll jump over to some married examples, and you'll see that once you have kids, because of the child tax credit and because of the standard deduction being higher, if you're making a similar level of income, you're going to pay less as a percentage of tax because you're getting a child tax credit. You're also getting a standard deduction, which is twice as much as a single individual. So if you're making the same amount as a married couple that you are as a single couple, you're going to clearly pay, in this example, 6 to 5% less of your income in taxes. So right here we have a married couple making $250,000, one who itemizes, one who takes the standard. Now the itemized deductions, I put in there around 30 to 40,000, I think, and the standard is 24,400. So we're not talking about a huge difference between the deduction here for itemizing and standard, which is why we'll see a very low percentage change here of only 1% between the two examples. But $250,000, 2 kids, you're going to pay about $42,000 in taxes, which is going to be 16 to 17% of your income. Again, better than the single individual at 23% because of the child tax credit and the bump up in your standard deduction there. Now, a married couple making roughly the same thing, again, from 250 to 240, they're basically making the same thing in gross income. However, this married couple has $150,000 in wages from an employer where they have a job at a company and $90,000 of long-term capital gains. Now, why that matters is because long-term capital gains get preferential tax treatment. This is why when you hear Mitt Romney or Warren Buffett or Donald Trump are paying a lower percent of their income in taxes, it's because they typically have long-term capital gains or qualified dividends, which are taxed at a better tax rate than ordinary income. So this particular couple who's making the same as this couple, but itemizes 2 kids, again, same fact pattern, roughly the same gross income, but made it in a different way. 2 kids, itemizing, they're going to pay $27,000 in income tax instead of $40,000. They're going to pay 11% instead of 16%. And that's simply because a large chunk was in long-term capital gains. Again, those are stocks that you held for longer than 1 year, property that you held for longer than 1 year. So it's investments that you've had for more than 1 year that you've now turned around and sold and made a gain on. They will be taxed at a preferred tax rate. So that's how you basically drop your tax rate down here. And that is to incentivize people investing because the thought is that investment will boost the economy. Now, again, you can get into whether this works or not, or whether paying, these high income or giving these high income individuals a break off of their income taxes creates jobs or helps them buy more and boost the economy. That's for economists to debate. I was not an economy major, not an economist. I'll let other people debate that. But that's the point, is to get the couple here incentivized to be investing in businesses and in the economy and things like that. Now, married couples who make roughly $250,000 of gross income make up just 3% of the people who filed a tax return. That's not very many people who fall into this category. All right, so now we have married couples making $1 million, itemizing, one with no kids, one with 2 kids. They pay the exact same amount in taxes, pay the exact same amount as a percentage of their income in taxes. And the reason for this is because when you get to this point, your kids, and again, assuming they itemize the exact same amount, your kids, though, you lose the child tax credit because you phase out of it. So some of these tax credits you will phase out of and you don't get anymore once you make a certain amount of money. So whether you have kids or not, you're paying the same amount. Now, 28%, $1 million of income, as we would expect, this married couple here is paying the highest amount of taxes as a percentage of their income. And that's what you would expect because they make significantly more money than anyone else on this side of the board. The biggest benefit here that we learned was long-term capital gains. Drop this person, if you can bump those up, drop their rate by 5%. So, and anyone can do this. I mean, you can invest small amounts in the stock market, hold the stuff for more than a year, or small investments, hold it for more than a year. And you too can pay, if you're in a lower tax bracket, you can actually end up paying 0% on long-term capital gains. So completely tax-free if you hold it for more than a year, depending on where you fall in that category. So let's flip the board over and let's take a look at some other examples. So we have married with 2 kids, taking the standard deduction, and they make $40,000. So we're going to look at some examples where people make a little bit less income on this side. So a married couple with 2 kids taking the standard deduction of $40,000. Now what they benefit from is the child tax credit, which again is based on the number of kids you have and your income level. And now we have something new that we didn't have on the other side, which is the earned income tax credit. So the earned income tax credit, basically you have to have earned income, but it has to be low enough to where you benefit from this credit. Now, this particular family, they're actually going to pay no income tax. And because of the child tax credit and the earned income tax credit, they're going to get a refund of $5,063 that they did not pay in. It comes from the government, and it's money, not excess withholding. We're assuming they withheld not. We're just looking at the amount of tax they owe. So they actually get $5,000 back, pay no income tax, which makes their tax rate negative 13%. If we divide that 5,000 by 40,000, that's an effective tax rate of negative 13%. If we take a single mom, 2 kids, standard deduction, she's going to qualify for head of household, which is basically a preferential tax bracket. So you can make more money taxed at the 10%, more money taxed at the 12% before you hit those higher tax brackets. It's not a tax credit, but you get better tax brackets, so your money's taxed a little bit lower as you make more. She also gets the child tax credit, the earned income tax credit. So on $40,000, she will get a refund of $3,082, making the effective tax rate negative 8%. Now you're looking at this and you're saying, wow, the single mom qualifying for head of household, she's not getting as much of a benefit as the married couple with 2 kids. Maybe that's not fair. Again, I'm going to leave that judgment call up to you. My suspicion is, they have an extra adult in the house, which is going to mean larger living expenses, more food that you have to purchase. And so maybe that's the reason why, this is a family of 4, this is a family of 3. Maybe that's why they get a higher benefit there. Again, up to you to decide whether that's fair or not. So we'll jump over here. I'll go back to this real quick. So the percentage of income, married, 2 kids, making $40,000 or less, that's 8% of the population. That's a decent number. Single moms or single parents, basically, head of household is what we're going to call this category. So head of household making $40,000 or less is going to make up 10% of the population who is filing a tax return. So go over here to married plus 2 kids. We have 2 columns. This is where we're going to compare the person who works for a company and gets a paycheck with a W-2 at the end of the year versus someone who owns their own business, is self-employed, and has to pay self-employment taxes. So we're going to make a little bit of a comparison here. Both of these families, married plus 2 kids, making $100,000 of gross income. So this particular person, in this case, $100,000 would be their salary from their company. This person, let's say they're making $120,000 from their business, but they have business expenses that they're deducting of $20,000. Therefore, the amount of gross income available to them would be $100,000. So same playing field here. Both taking the standard deduction. So that again is just a subtraction off of your income that's not taxed. The person who is self-employed, they get to deduct 1/2 of their self-employment taxes. Now there's also this is new, qualified business income. So this particular person is going to qualify for a QBI, qualified business income, which is an additional deduction of $13,000. Now, because of these 2 deductions off of their gross income, the income tax rate is going to be lower. So this person over here, W-2, is going to pay $4,600 in income tax, which is 5% of their gross income. The self-employed person is only going to pay 2%, or $2,200 in income tax, which sounds great. We should all be self-employed. But wait a second. This person had to pay all of their Social Security and Medicare, 15.3%. But they got to deduct half. Plus, this person had to pay half of theirs as well, 7.65%. So let's cancel that out. This employee is paying 7.65, so subtract half of it from this employee. So the amount that they have to pay additional would be half of it, right? The employer would typically be paying this half, but this person's going to have to pay it. So let's add the 7,000 to the 2,000. You're going to pay $9,000 in taxes for being a self-employed person compared to this person's 4. That's going to put you at 9%. So even with the qualified business income deduction, even with deducting 1/2 of your self-employment tax off of that, you're still going to come out behind, in this particular example, the person who's got a W-2 job. So this is where, we say small business owner is getting hammered with taxes. Now, if they start hiring employees, they got to pay the half of the employee's self-employment tax. So again, we're kind of staying away from the FICA, the Social Security, and the Medicare a little bit, but it did need to be added in here because that's a real number. The half of the Social Security and Medicare that this person's not paying that they do have to pay, which jumps that up from 2 to 9%. So that's a real number we have to pay attention to. But when we look at this, married, making between, I think, making around 100,000. This is less. This is 1% of people who file a tax return. It's a very small number of people. So now we're going to jump into a little bit more of who's paying taxes, the number of people who are in that category. Now, we covered it a little bit, the 8, the 10, the 1. So if you look at this side of the board, we've got a good amount of people who aren't paying any income tax and are actually getting money back from the government. So not only are they paying 0%, they're actually paying a -% effectively of income tax. The folks over on this side, 5 to 2 to 9%. Okay, so they're doing that. If you remember from the other side of the board, these were our higher income folks, and the percentage is much higher. We've got 28 to 16, 23 all over this side of the board. So let's take a look and break this down a little bit more so we can see, again, more data so that you can decide who's paying their fair share. All right, we have our board cleared off. Now let's jump into looking at who's paying the most of the taxes as a whole. So we looked a little bit at the tax rates based on income level, and you can use that data to decide who's paying their fair share. But we need to look at this as well. And so as far as folks who have filed a tax return, people making $40,000 and less, they're going to make up 52% of people who file tax returns. So if you remember, the single parent with 2 kids making $40,000 or less had a negative tax rate. The married couple with 2 kids making $40,000 or less had a negative tax rate. and the single individual with no kids making 40,000 or less had a tax rate of about 8%. So 52% of people who filed a tax return are in that negative tax rate, or up to 8% if they're single and making 40,000. So that's more than half the population who are 8% or below of their income paid in taxes. Now, from 0 to 100,000, that's going to make up 82% of people who file a tax return. So 82% of people who file a tax return are making $100,000 or less. So if you're sitting here, you're making $150,000 and you're complaining about the amount that you have to pay in taxes, even after you pay your taxes, you still have more money left over than 82% of the population. And so I'll leave that there. We should be grateful for what we have instead of complaining. People here, they should be grateful for what they have as well. But just to say, you're making more than 82% of people. So even after you pay your taxes, you're still doing pretty good. 200,000 plus. And these people, we saw the 250,000, they're getting hammered with like a 28% effective tax rate. This is 5% of the population. So, you're in this category, you're paying 28%. Again, you're complaining maybe, but you're doing better than 95% of people even after you pay your taxes. So does that make it fair? I don't know. Again, it's up to you to make that call. So one more item we're going to look at: people who filed a tax return and had no taxable income. So this is a little bit different. So you might have taxable income and then the child tax credit and then the earned income tax credit, which can get you to 0 or negative effective tax rates. But these are people who had no taxable income at all. So their income minus their standard deduction was 0. They had no taxable income. So no taxable income, which means they're definitely paying 0% income tax, maybe negative if they also additionally qualify for some of these other tax credits. Their income tax percentage might be a negative number. This is 32% of people who filed a tax return. One third of people who filed a tax return have no income tax and possibly have a negative rate because they're getting refunds when they didn't pay in anything. 50%, pretty low, possibly negative. Okay, so let's look at this a little bit different. This is going to be the total amount of taxes paid to the government. This is 100% of the amount of taxes in whole dollars, dollar amount, not percentage tax rate anymore. We're going whole dollars. So maybe it's a couple $1 billion in taxes paid to the government. This makes up 100% of that. This is the number of people who filed tax returns based on income level. Okay, so the number of people who paid the taxes that make up all the taxes collected by the government. Let's take a look at this real quick. So people who make less than $50,000. Okay, so the people who make less than $50,000, make up 59% of the tax returns that were filed. Okay, less than $50,000 is 59% of the people who filed a tax return. They are going to pay 5% of the total taxes to the government. Less than $50,000 of income, paying 5% of the dollars to the government. 50,000 to 100,000 is going to make up our next category. So if you make gross income of 50,000 to 100,000, you are 23% of the people who filed a tax return fall into this category of 50 to 100,000. That's 23% of the people who filed a tax return. Those 23% of people are going to pay 14% of the taxes to the federal government. All right. Now, if you make between 100,000 and 500,000, you make between 100,000 and $500,000 of income, you are going to make up 17% of the number of people who filed a tax return make between 100,000 and $500,000 of gross income. These 17% of people are going to pay 42%. So those 17% of people, 100 to 500, I know it's a big bracket. That's kind of how they break down. 100 to 500, 17% are paying 42%. That's a big number. So we're talking middle class here. That's where most people say the burden of the tax bracket, tax liability is on. Maybe so. I mean, they're paying a pretty high percentage. And one last category that we have to cover. I got one color left, orange. The last category we have to cover are the people who make $500,000 plus. If you make $500,000 plus in gross income, only 1% of people filing tax returns make $500,000 plus. They are paying 39% of the dollars paid to the government. 1% of people paying 40% of the tax. This breaks it down a little bit differently. We're not worried about, is that 1% paying 17%? They're paying 14%? Are they paying 30% of their income? We're saying of the tax dollars that the IRS collected, 1% of people are paying almost half of it. All right? And a significant chunk of people are paying almost nothing. And there's a lot of people in this 59% category who are paying nothing or getting money back. 60% of people paying only 5% of the slice, 1% of people paying 40% of the slice. All right, let's look at this one more way for visual perspective. So 1% of the people who filed a tax return, 1 out of 10, will pay 4 out of 10 as far as tax dollars go. So people, tax dollars. The next group, 17%. 17% would be 2/10 here, pretty much. 17% of people over here are going to pay 4. 1, 2, 3, 4. And the next group is 23% of people. 1, 2, 23% of people are going to pay about 1.5 of these. 1.5 of these. And the remaining 60%, 1, 2, 3, 4, 5, part of this. These people are going to pay this much. So again, a little bit of a visual representation here. This number of people pay this amount of the income tax collected by the IRS. This number of people pay this much. So these together are going to pay almost all of the income tax. And this group here, more than half, is going to pay this little bit. So I hope this helps. Again, I'm not going to tell you whether or not this is fair or not. More people, these people can afford this, so maybe it's fair. If you look at it from a perspective of the number of people paying the amount of tax, you say, that's clearly not fair, because all of the weight is on these people's shoulders, but they make more money, so the weight doesn't hurt as much. It's not as heavy to them to carry that much of the burden. And so that's going to be left to the debates. And again, I probably didn't help solve the problem, but I wanted you to have the data to see what the typical percentage people are paying, the amount, because the thing that really gets me is basically half. Half of the population doesn't actually pay income tax. If you're making $40,000 or less, If you're single, you're paying some income tax. If you're not, you're not really paying any income tax if you're making $40,000 or less. And so there's a lot of people who aren't paying any income tax but don't realize that. And there's a lot of people who are actually getting money back and have a negative effective tax rate, but they don't realize that either. And so I just wanted to put this out there where, is it fair? Is the middle class being hammered? But again, those are conversations we need to have. And I wanted you to have the data so that you don't hear these stories and then throw out random things that just don't make sense. There's the data. You can make the call yourself on what's fair. Thanks for watching the video. Let me know in the comments if you have any questions, if you have any thoughts, if you're like, dude, you completely left out this category of people, like where do they fall? Or if you're like, man, this is crazy, like you didn't do this. Leave those comments for me. I love that feedback.